When a global superpower accuses another of plotting to erase $37 trillion in debt, the world listens. Last week, a senior advisor to Russian President Vladimir Putin claimed that the United States is quietly preparing to reset its colossal national debt through stablecoins and crypto markets, a move that, if true, could rewrite the rules of modern finance. But is there any truth behind this claim? Or is it just geopolitical theater designed to shake confidence in the US dollar? Tonight, we're digging deep into the numbers, the motives, and the global impact of what some are calling the biggest financial reset in modern history. Over the past week, Russia has once again thrust itself into the global financial conversation. During an international economic forum, Anton Kobiakov, a senior economic advisor to Vladimir Putin, made a stunning statement. He alleged that the United States government is preparing to use the cryptocurrency ecosystem, particularly stablecoins, as part of a grand strategy to devalue and restructure its roughly $37 trillion national debt. Kobiakov claimed that this plan would allow Washington to reset the books without a traditional default, essentially pushing part of its debt into a digital framework that could redefine the global balance of power. Now, at first glance, this sounds like a wild accusation, but underneath the political drama, there's a serious conversation worth having because the US debt problem is very real, and global policymakers have begun openly questioning how sustainable it truly is. In 2025, US federal debt crossed $37 trillion, equivalent to roughly 140% of GDP. Interest payments alone have become the fastest-growing item in the federal budget. Analysts projected by 2030, the U.S. could spend more on debt servicing than on defense, healthcare, or social security. That's not just a number. It's a sign that the system is nearing its limits. So, could the U.S. really be planning some kind of reset? Let's start with what that might even mean. Traditionally, when countries become over-leveraged, they face three paths: default, inflation, or restructuring. A default would destroy global trust in U.S. treasuries, the backbone of the world's financial system. Inflation, a silent tax on savings, has already been tested in the past few years, but it's politically explosive. The third option, restructuring, is the most complex because it involves rewriting the terms of repayment, revaluing assets, or creating a new kind of monetary framework. And that's where the crypto angle comes in. Kobiakov claim centers on the idea that the U.S. could use stablecoins, digital currencies pegged to the U.S. dollar, as a bridge to this new system. Stablecoins like USDT, Tether, USDC, and others already represent more than $150 billion in circulation, used globally for trading, remittances, and even unofficial banking. According to Russia's narrative, the U.S. might attempt to formalize a blockchain-based debt instrument system, effectively allowing old paper debt to be tokenized and managed differently. The supposed benefit? Transparency, programmability, and the ability to reprice obligations under the guise of modernization. Of course, this is where reality and speculation start to blur, because as of today, there is no evidence that the U.S. Treasury, the Federal Reserve, or any major American institution is planning to tokenize or erase debt through crypto. But the reason this story gained traction is simple. People want to believe that something big is coming. The global financial system is stretched, debt levels are historic, and cryptocurrencies have matured enough to make such a theory sound just plausible enough. But if you zoom out, though, there are a few clues worth analyzing. First, the U.S. government has become increasingly open about central bank digital currencies, or CBDCs. The Federal Reserve has already conducted pilot projects exploring how a digital dollar might function in wholesale payments. While officials insist that these projects are purely exploratory and unrelated to debt, the timing coincides with rising financial stress and growing global distrust. Second, the U.S. has subtly shifted its monetary behavior. The Treasury is issuing more short-term debt, while the Federal Reserve quietly buys back older, longer-term bonds. That's not a crypto reset, but it is a restructuring strategy designed to buy time. It's the kind of adjustment that signals the U.S. knows its debt profile isn't sustainable forever. Third, there's the geopolitical angle. Russia and China have been leading efforts to de-dollarize global trade, encouraging nations to settle transactions in yuan, rubles, or gold-backed assets. The U.S. in turn continues to defend the dollar's dominance. Accusing Washington of planning a digital reset serves Russia's narrative. It plants doubt about the stability of the U.S. financial order while legitimizing alternative systems like BRICS's proposed digital currency framework. Still, let's explore this hypothetically. If the U.S. truly attempted to reset its debt using stablecoins or tokenized instruments, what would that look like? Imagine the Treasury announcing that all future bonds would be issued as blockchain-based tokens, each embedded with programmable interest rates. Investors could trade them globally 24/7, outside traditional intermediaries. Over time, the government could phase out older debt under the pretext of modernization, while potentially adjusting the value of those instruments through software-based mechanisms like repegging or upgrading smart contracts. In other words, a technical reset, not an official default. It sounds futuristic, but it's not completely insane. Some private banks are already experimenting with tokenized bonds and blockchain-based settlement systems. JP Morgan, BlackRock, and even the World Bank have all conducted trials in this direction. In that sense, the foundation exists. What doesn't exist, however, is the political will. A move of this magnitude would require rewriting decades of financial law, renegotiating with every debt holder from China to pension funds, and risking global panic. So why is this story important for ordinary people? Because even if it's just propaganda, it exposes the fragile psychology underpinning global finance. The fact that such a claim resonates tells us how nervous investors are about the dollar, inflation, and digital currencies. The average American household is carrying record-high debt, from mortgages to credit cards, while global investors are diversifying into gold, Bitcoin, and commodities as hedges. Every rumor about a U.S. reset fuels that flight to alternatives. But here's the nuance. The U.S. doesn't need to reset its debt overnight. It can simply inflate it away slowly, as it's done for decades. By keeping inflation slightly above interest rates, the real value of old debt erodes quietly over time. In that sense, the reset is already happening, just not through crypto, but through everyday price inflation and monetary expansion. The crypto angle simply adds a modern twist to an ancient financial trick. This leads to a bigger question. Could crypto itself become a tool of U.S. strategy? In many ways, yes. Despite public skepticism, Washington is deeply involved in shaping global digital asset regulation. Stablecoins, once dismissed as shadow money, are now under serious policy consideration. The U.S. Treasury has hinted at frameworks that would bring them under federal oversight, which could effectively turn them into digital extensions of the dollar. If that happens, stablecoins could strengthen the dollar's reach, not weaken it. That's where Russia's accusation starts to backfire. If the U.S. succeeds in integrating stablecoins under its control, it doesn't reset debt, it reinforces dominance. Every country trading in dollar-backed digital assets would still depend on U.S. monetary policy. That's not a reset, it's an upgrade. Now, from an investor's perspective, what should you take away from this? The key is not whether the claim is true, but what it reveals about the future of money. Whether through official CBDCs or privately issued stablecoins, the digitization of finance is inevitable. Governments will leverage blockchain for efficiency and control. The U.S., burdened with debt, will use every tool, fiscal, digital, or otherwise, to sustain confidence in its currency. And in that environment, investors need to prepare for volatility, opportunity, and transformation. We're entering an era where geopolitics, technology, and economics merge into one battlefield. Russia may accuse, the U.S. may deny, but behind the headlines, the real story is about control over the future of value itself. Whether Russia's claim is truth or theater, it highlights a growing reality. The old financial world is cracking, and a new digital one is forming. The U.S. might not be planning a $37 trillion crypto reset, but it is reprogramming the global system in its own way. The question is, are you preparing for that shift, or waiting to be caught off guard? Subscribe to Wealth Hub, stay informed, and stay ahead of the next financial revolution.